whenever we trade in the stock market, we buy shares of a particular company. So whenever we buy a particular share, we have to pay certain cash amount and you will get delivery of that share. You are buying into a company. You are buying the equity of that company. So this is called equity trading. It's also called as spot and cash because it has to be spot settled. You are actually paying cash. You get delivery after a certain amount of time, that is T+1 or T+2 according to the various exchanges in the world. So this is how equity or spot or cash markets work. When you pay 100 rupees to buy a share, you are paying it on the spot. So you're not taking a loan or you're not taking leverage. So this spot transaction is why it is called a equity cum cash cum spot market.
So let's understand what equity futures and what spot actually means. First, I'll open the National Stock Exchange website and I'll also open the BSE India website, that's the Bombay Stock Exchange website. Now here we'll select equity. Let's select Reliance. Reliance is trading at 975 rupees. And BSE, let's open Reliance again. And you'll see we get all other Reliance companies. I'll select Reliance Industries. And we can see that it's trading at 975.95. Now, if I want to trade Reliance in the equity segment, notice that this is equity BSE. Its equity as well. You will notice that all I need to do is pay 975.95 rupees and I can own one share of Reliance. It's pretty simple. I pay what you see and this is called spot. It's called a spot transaction because the settlement is happening on the spot. You want to buy one share for 975.95. Someone wants to sell that share and you get that one share in exchange for paying that full amount. Now the question is, if you are paying the entire amount in equity, it's called on the spot. That makes sense. But in what case do you not pay the full amount? Well, the answer is derivatives. So let me go here and change this to equity derivatives. I'll type Reliance now and you'll see that I'll get Reliance futures. Now this is also priced at 979.25, but can I buy one share of Reliance futures? The answer is no. Let me zoom in over here for you. Here we have something called market lot. Now market lot means 1000 shares is the minimum amount of shares you have to buy in order to trade this future contract. So I cannot buy one share or 5 shares or 100. I need to buy a minimum number of 1000 shares. So how much are you paying? You're paying 979.25 times 1000. Let me multiply this very quickly. That's 979.25 multiplied by 1000. That is 9,79,250. Now in derivatives, I don't need to pay the entire amount. We need to pay about 1.25 lakh rupees of margin to control about 9.79 lakh rupees worth of stock. Notice you have leverage here. You're paying a small amount of margin to control a large amount of contract. Now this, the settlement, has not really happened. You've only paid a fraction of that entire amount. So look at this. When you own one lot of Reliance futures, you're controlling almost 10 lakh rupees of contract value by paying a little over lakh rupees. So the settlement for this will happen in the future. This case, the expiry is much later. So when and if you do take delivery of this futures lot, you have to pay the entire amount then. And then the transaction would be settled. So this is the difference between Reliance equity, where you're paying on the spot, you bring the full amount, versus Reliance derivatives. Whether it's stock futures or writing options, you have to pay a margin to control a large amount of stock. Just remember, normal equity is called cash transaction, it's called spot, and it's also called an equity transaction. So don't get confused with these words.